Hey members, Chris from Mullen here. Just want to give you a quick afternoon update. It's almost lunchtime. Let's take a look. Here we've got our trend analysis 30-minute chart. So this is the SP500, the 30-minute chart. Now this is only regular trading hours. This is the last um, several sessions. It goes back to November 2nd. So we're looking at 2 weeks of trading sessions. More or less, we were red in a negative territory, starting to get a little bit overbought. More or less, we were hoping it was going to turn back into an uptrend, and it did turn to an uptrend. And what we had here, this was the major resistance level. Now, if we were to look on this chart on the left, this is where we had pretty major resistance right across these tops. Price did not close or break above there. You can see that on the daily chart on the right. And that was that key level where it got overbought and it was kind of holding at that level. And then we had Monday, the vaccine news, and of course a massive pop in the market. It may not look that big just because this market is extremely volatile. I mean, from the lows to the highs, I think it was a 13% move from being oversold to flipping and popping up here. And then we had this big gap that I talked about, how Monday looked like it was going to be one of those pop and drop type of days where it gaps up above resistance. This was resistance. It gaps above it. The market can kind of create a bridge in pre-market and after hours to get through it and create a lot of short covering. And then there was really positive news, which creates this massive gap higher the next day. And of course, the market ended up selling off, coming down, and almost filling that gap. And then the following session, we saw it go down to fill the rest of the gap in the morning. Relatively narrow candle day. And then yesterday and today, we're seeing it kind of continue to move a little sideways and consolidate. Now, what I want to show you here is we know gaps tend to get filled. So if we were to just look at this pattern, the SP500 is, I'm going to just grab this next tool here if I can grab it. All right, so if we were to just grab this tool, Fibonacci extension, and go from the high to the low to this current high, that gives us an idea of where the downside move with this somewhat bearish formation is happening. So we had a gap up, big reversal bar to the downside. It's created this bear flag, and if this does continue to sell off, we could come back down to the 618 and potentially all the way down to the 100% measured move 343. So this, we're starting to see some selling here. This blue line is equivalent to the 5-day moving average, which when you're above it, it should act as support. It is trying to hold there today, but it is starting to roll over a little bit. Feels like this market may pick up speed and continue to cleanse itself out. I have everyone piled in up here and in the stock market. And usually when everyone does that, it's usually the sign of a short-term top. So we are bullish. Bars are green. We're looking for higher prices, but the way that the more or less the landmine hit the stock market, which was the vaccine news, creating this huge gap that almost no one could take advantage of unless you were in a position. But again, we are going into super high volatility election news. It's a high risk type of play. The shorts got slaughtered, the longs locked out, but more or less it all has been given back only a few days later, and we could see this continue to flush down. Now, this gap has been filled. Now let's go and take a look over at the NASDAQ. I want to show you the difference between these different indexes. The NASDAQ had this gap to the upside right here. We had this gap here, and more or less it ended up coming all the way down, filled the gap, and it's gone beyond there. Now it has had a big move down. It's reacting higher here. If we just look at this price action, we have somewhat of the same bearish type of pattern forming in the NASDAQ. So it's down, it's been consolidating, could come back down. The measured move most likely be a gap fill through here if this market is going to fill this gap. And typically we see the NASDAQ SP500 gaps get filled, or we see gaps on the indexes in general get filled. So there's potential we could still see some pretty good downside and kind of a cleanse of this exhaustion kind of blow off top in the market. Now let's go take a look at the Dow. This is a real eye opener. Gaps have been filled on NASDAQ and SP500, and we have a massive gap on the Dow, and it is far from filling. If this gap is going to fill, we still need to see these stocks pull back quite dramatically. In fact, if we were to just take a percentage from where we are this afternoon to a gap fill, we're looking at 2.69% just to come down and fill the gap to the high here. So if this does continue to sell off, let's also take a look over at the Russell 2000. Russell 2000 has been leading the way. It's holding up very well, but it still has price gaps as well. Yeah, we got this massive gap area that still hasn't been filled. There's actually another gap down over here as well. Probably the same on the Dow. I didn't look down there, but there are some gaps to be filled in this market, and we could see this flush down. If you look at this big bar on the daily chart where it gaps up, gapped up over 7%, rallied up a little bit more, and then got completely hammered, we could see this pattern come down and fill this big gap on the daily chart. So that's kind of what we're looking for. Now, most of the sectors have turned bullish, but most of them aren't really getting any traction in terms of, typically when the market turns bullish, with this type of signal, we typically see the market run and sectors start to take off. The reality is most sectors are not generating those moves. It's not generating real gains. They're not following through with this move. So we are a little hesitant here. Overall, we're going to keep our eyes open for these leading sectors, but really all the sectors have done this. They gapped higher and they're kind of in this pause mode, debating whether money is going to continue to flow in and people are going to commit to this huge kind of overbought move. I mean, you look at this move, it's 20% in like a week and a half on really very interesting news, election and vaccine. Or we're going to pull back very quickly and we could see this correct in easy 5 or 10%, the stock market index, the Russell 2000 in terms of percentage wise. So that's where we are. This landmine, this huge gap and run up has created this big move. If we go and look at a lot of different sectors here, take a look at clean energy. It gapped higher and then went into a waterfall sell-off, and it is performing well. Money is moving in there, but you get this huge volatility price action, which adds a lot of risk and uncertainty. If we look at the SMH, the semiconductors sector, it also cleansed down. It did come down and pretty much filled this gap. I would say that's close enough. I mean, this isn't the index, so it doesn't have to fill perfectly on an ETF. Generally, we see price gaps get filled, but it's not the same. The key is with the indexes getting filled. If we look at, let's take a look at the transportation index. Transportation index gapped higher. It's been holding up fairly well. The transportation, the Dow, the Russell 2000 small caps, they all have a very similar chart where they've pulled back from the highs, they're consolidating. They're actually holding up very nicely. They're above the 5-day, and they are leading this market at this point. They're doing very, very well. Let's take a look at TAN real quick. It's similar to the clean energy, but when you look at it, it's a pretty noisy chart. The daily chart, there's been, I wrote an article about it back over here, and this is when a lot of traders on Robinhood all piled into it. And when you see everyone from Robinhood piling into a sector, short term, it's most likely done. It becomes a crowded trade, and we saw a big pullback from there. But now we're getting back into these huge blow-off spikes and volatility. Definitely high volatility, lots of risk in most of these leading sectors. They've all had these big gaps and drops. So this is the problem, is there's a lot of volatility and there isn't a clear direction. I mean, the bias and the trend is up, but all these sectors are pretty much in these huge ranges between the highs and the lows. And if we were to just throw, a level to get an idea, these leading sectors, I mean, we're looking at 25% swing in price that can happen in only a few trading sessions. So that's why we're kind of trying to let the market gauge out, maybe flag out, build a base, and hopefully the leaders will hold up and base higher versus the laggards will be underperforming, and we'll get some type of signal. The more it can consolidate, the more the kind of volatility, the random volatility will come out of the picture, because here we've got the whipsaws to the downside, the upside, the downside. We need some type of stability here. So that's what we're kind of looking and waiting for in this market. We may get long an ETF here this week before the week is over, but we'll see how things play out. And that's where we stand in the markets overall. Anyways, hope that gives you some insight. Talk to you soon. Bye-bye.